Welcome to Tesla Deep Dives. We are committed to objective, in-depth insight. The pivotal topic on our agenda today is the China Shockwave, analyzing the strategic implications of Tesla's massive European retreat and BYD's global advance. The electric vehicle landscape is experiencing a tectonic shift, moving from a US-led monopoly to a China-dominated global market. This video dives into the China Shockwave, Tesla's dramatic retreat across Europe, contrasted with BYD's relentless global advance. The key question is whether Tesla's long-term AI bets can outweigh BYD's current irrefutable dominance in affordable EV production and local market penetration. This isn't just an EV story, it's a strategic pivot point for global manufacturing and investment. Tesla's European market position has eroded rapidly in 2024-2025. Q1 2025 sales in France plummeted by 41.1% year-over-year, leading to a drop in overall European market share to a multi-year low of 1.2% in Q1 2025. The slide intensified, with October sales across the EU, UK, and EFTA declining by a massive 48.5% year-on-year, pushing Tesla's market share to a mere 0.6%. Simultaneously, the operating margin for the company fell from 10.8% to a concerning 5.8%, directly reflecting the intense pricing pressure necessary to move inventory. In the same markets, BYD's growth is staggering. Their European sales in October surged by 206.8% year-on-year, successfully outselling Tesla for the month and achieving a 1.6% market share, 50% larger than Tesla's share in the region. This shockwave is fueled by a massive price advantage. Models like the BYD Dolphin Surf start at £18,650 in the UK, less than half the cost of a Tesla Model 3 at approximately $39,000. The company's exports tripled in the first 8 months of 2025, reaching 84,400 units. The core of BYD's advantage lies in its vertical integration, controlling 75 to 80% of its supply chain, including the proprietary Blade battery, which has a cost advantage of roughly €10 per kilowatt-hour over rival technologies. By contrast, analysts criticize Tesla's aging product lineup of the Model 3Y, which faces stiff competition from newer, more affordable models like the BYD Auto 3 and Renault 5. Tesla's sales slump is not purely competitive. The European Automobile Manufacturers Association cited continued objections over CEO Elon Musk's political affiliations as a factor chipping away at sales, particularly after he publicly praised far-right parties in Europe. This has led to reputational damage, with some Reddit users worrying their Tesla might be keyed or vandalized due to the social climate. This factor contrasts with BYD, whose European strategy is simply focused on affordable, localized production and strong partnerships. Skeptical financial analysts, such as those at Barclays, maintained an equal weight rating and low price targets, e.g. $180, citing weak Q2 delivery forecasts and an inventory build of about 150,000 vehicles globally. Meanwhile, BYD receives a strong bullish push. Goldman Sachs analyst Tina Howe maintained a buy rating, projecting a 30% compound annual growth rate for BYD's earnings from 2025-2028, with overseas profit rising to 60% of the total, driven by its overseas production and competitive models. The bullish case for Tesla pivots entirely on future tech. Elon Musk acknowledged, "We probably could have a few rough quarters," but claimed he would be surprised if Tesla's economics are not very compelling once full self-driving, FSD, and robotaxi roll out. Deutsche Bank analysts recently raised Tesla's target price, citing a multimodal SOTP framework that incorporates higher estimates for the robotaxi business. Conversely, BYD skeptics on investor forums point to its vulnerability, citing a negative free cash flow of $6.8 billion in H1 2024 and its inherent dependence on Chinese government subsidies. BYD's aggressive response to the EU's up to 27% tariffs on Chinese-made BEVs is localization. BYD Executive VP Stella Li noted the company's strong disagreement with the tariffs, but confirmed plans to manufacture nearly all the electric vehicles it sells in Europe in the region. Production starts in Hungary, Szeged, 220,000 units per year by 2027, and Turkey, March 2026, moving final assembly inside the tariff wall. Furthermore, BYD is strategically shifting to PHEVs, a segment growing rapidly in Europe, to address the market's preference for extended range. Consumer-level sentiment reflects a quality versus software split. On European car forums, buyers frequently praise the BYD Seal's premium interior and comfy seats, while criticizing its software as clunky and its advanced driver assistance systems as bad and overly sensitive. Conversely, the Tesla Model Y is lauded for its extraordinary vehicle dynamics and far superior software, but criticized for its poor suspension and the negative social climate associated with the brand. The market currently exhibits a bifurcated narrative. Short-term investor sentiment is dominated by BYD's tangible, cost-driven market share gains in Europe, reflected in its positive sales volume momentum. The long-term, high-valuation narrative for Tesla, however, remains tied to the unproven monetization of FSD robotaxi, a strategy which Musk believes will ultimately make the company's economics very compelling. The immediate reality is that in the fight for European consumers, BYD's strategy of good enough cars at an unbeatable price is demonstrably winning over Tesla's perfect future premium. Investors must monitor 4 key indicators. First, the pace of BYD's factory ramp-up in Hungary/Turkey. A rapid local production start will confirm the tariff bypass strategy. Second, the commercial launch timing of Tesla's long-anticipated sub-$25,000 Model 2, which is crucial to recovering market share. Third, Tesla's FSD regulatory approval in the EU, which is necessary to unlock the high-margin AI company narrative. Finally, the year-end inventory levels for Tesla, which must decline from Q2's reported build to signal a successful clearing of their existing Model Y/3 stock. Let me know what's your thoughts and leave your comments. Thank you for joining us for this crucial deep dive. To ensure you never miss a pivotal analysis, please like the video, subscribe to the Tesla Deep Dives channel, and hit the notification bell. Your engagement fuels our critical research.